Welcome to the Lone Ranger Radio Show. My name is Bruce Woodburn, CrossCountry Mortgage, and they call me the Lone Ranger. I'm here to talk to you about all kinds of things that are related around financing and real estate, mortgages. If you're looking to buy a home, sell a home, refinance a home, this show should be interesting for you. We'll cover a lot of ground, but I like to cover things that are interesting for people that may be interested in buying, selling, or refinancing. And even if you own a home and you're not interested in buying, selling, and refinancing, I hope you get some value out of this, because we're going to talk about a lot of great things that can really affect you and your financial position. So when it comes to things like that, we want to make sure that we are completely informed and informed all the time. So let's get right down to it. And let's talk about what interest rates are doing, because, we had the Fed cut the Fed rate on September the 18th. Okay. Everybody was anticipating interest rates were going to drop. They dropped for one day, and then they started to go up, and they got worse, and they got worse, and they got worse, and they're still getting worse, even as of today. Why would that happen? How come the Fed drops the Fed rate, and that means that interbank exchange of money is cheaper to the tune of 0.5%, and yet interest rates go up? Now, if you are a diehard listener to me, which I hope you are, you will have known why, and you will remember that I told everyone a month before the Fed cut and every week leading up to it that we could see higher interest rates if the Fed cuts the Fed rate. But you know what? I got emails, I got text, I got all kinds of people going, what in the world are you talking about? But I'm going to tell you, not only did it happen, but I told you it was going to happen. Now, that's not an I told you so. It's not. And I had a client say, you must be some type of a clairvoyant. I'm not. I have no idea what's going to happen in the future any more than you do. But what I do understand are patterns, and I understand results of when the government makes a move. I understand what happens, what the potential of results are on happening. And it was clear that we were going to get a Fed cut rate. We didn't know whether it was going to be a quarter or a half, and it ended up being a half. And we had already seen the rates drop. So rates had already come down about a month and a half before September 18th. So that would have been around the beginning of August. Rates started to improve, because the anticipation was that the Fed was going to cut the Fed rate, and they did. Now, why would interest rates go up when the Fed cuts the Fed rate? You have to understand the purpose behind dropping interest rates. So what is the main reason the government, the Federal Reserve, dropped interest rates? Well, there was a couple of reasons. First of all, they were getting pressure from the central banks because they were dropping theirs. Secondly is inflation had come down. So those things caused them to say, hey, look at inflation is easing. We're getting pressure from central banks. Let's drop the Fed rate. Now, what happens to the economy when the Fed drops the Fed rate? Does it get better or does it get worse? It gets better, because people have more money to spend. They think it's cheaper. So it rallies the stock market. So the stock market did very well. But when the stock market rallies, it pulls money, it pulls energy out of the bond market. What do you think mortgages are tied to? That's right, the 10 and the 30-year Treasury. So you have to remember, institutional money, meaning big money, hedge funds, insurance companies that are moving billions of dollars around, they are swaying the market in one direction or another by the movements of where the money goes. But when they see that there's economic opportunity, they move into equities, stocks. When they see uncertainty, they move their money into bonds. They don't make a lot of money on bonds, but they don't lose money. It's a safe haven for them. So when money moved from bonds into equities, it tanked the bond market and interest rates started to go up. Now, we've lost, as of today, over 250 basis points on the bond market. Now, let me just put that in perspective, folks. 250 basis points is 2.5 points to you. So whatever the rate was at zero on September 18th would now cost you 2.5 points. Now you think about that, folks. You're getting every $100,000 mortgage, you're paying $2,500 more. Every 100,000, you pay $2,500 more in loan cost to get the same rate. So people don't get the same rate. The lenders bump the rate up so they're not charging you 3.5 points to get that loan. So now you're going to go from, say, a 6 to a 6.5. Right now, I'm even seeing rates in the high sixes. It's incredible, but it is what it is, and it will get better. And one thing is for certain, you're going to have a new president in a little over a week. Somebody is going to be our new president. That's a guarantee. Now, depending on who gets in my opinion, depends on what direction the economy is going to go. In the last 4 years, the economy has gone to hell in a handbasket, but yet our government's going, oh my God, the economy's doing great. I'm in the finance business. I know when the economy's doing good because you guys are doing good and you're not doing as well. Matter of fact, the average American family is spending almost $30,000 more per year, 30 grand more per year to keep your family going to the same quality of living it was at the end of Trump's 4-year term. It's costing you almost 30 grand a year more. Now, you can say that some of these governments want to tax you more and some don't. I'm going to tell you something. That's not a tax, but it hurts worse than a tax. And that's what inflation does. So we've got to get this under control. I do personally believe that if President Trump gets in there, we're going to see a lot better economy. I think the real estate's going to rock and roll. I know Kamala Harris wants to do a $25,000 credit, but let me tell you something. A lot of that is just hyperbole. We've done them before. We've done 20, and it's usually in a tax credit. So you don't even get the money. It's a tax credit. Now, $25,000 towards down payment assistance is going to help, but it's only going to help the first-time home buyer. And listen, first-time home buyer needs help. By the way, write this number down. Tampa, 813-213-4009. Tampa, 813-213-4009. Orlando, all the way to Jacksonville, 407-706-3313. 407-706-3313. Website, WeBringYouHome.com. Write that down, folks. WeBringYouHome.com. I'm going to bring you home, baby. WeBringYouHome.com. So first-time home buyers definitely need a leg up right now, a leg up. So 25 grand is going to be big. But I'm going to tell you something. I think that Trump would do something very similar, and he'd probably do it better so you had more of an impact. Because right now, you can tell it's like the student guy that's running for student president going, every Friday, everybody's going to get a free pizza. Yeah. Where's that money going to come from? We don't have the money. So you have to figure that out. So you can tell the general population in order to win votes that you're going to do something. But unless you've got a clear plan that Congress is going to sink its teeth into and the Senate's going to sink its teeth into, you're not going to get it done. You're not going to get it done. So you can have all the great thoughts you want, and then the money's got to come from somewhere. Right now, we don't even have money with FEMA, and we got people that are homeless in North Carolina that their houses were washed away. So there's a lot of things we need to do internally. And I believe we need to take care of our foreign countries because, we got to keep our ammunitions out there to protect us, but we got a lot of problems at home right now. And if we don't fix our problems at home right now, how can we fix our problems abroad? You got to put the oxygen mask on you first. Right now, I think America needs an oxygen mask. If you agree with me or disagree with me, call me or text me, 407-706-3313 or 813-213-4009. Or start your application at webringyouhome.com. So we'll see. We got an election on a week from Tuesday. So I hope you get out there and vote. But I'm going to tell you something. It's going to be a close call, and it makes me nervous. So who is getting mortgages and buying real estate right now? Well, there's a variety of people. Believe it or not, there's a lot of cash buyers out there right now. Why are cash buyers jumping in the market? Because they see buying opportunities. You see, the average person, when the economy doesn't seem to do well, runs from it. But the smart investor runs to it. So you get people like Warren Buffett and big financial companies and these big hedge funds that are buying real estate. They're buying them right now. Why? Because it's a buying opportunity. But the average person looks at it as, no, I don't want to buy right now. Interest rates are too high. Housing prices are too high. They're not too high. Matter of fact, we are seeing a 5% increase from this time last year on housing. 5%. That's a huge increase in housing. And now we have more inventory on the market. That gives buyers a huge opportunity to negotiate. A buyer that's shying away from buying right now is a fool. They are a financial fool. Okay. Now listen, if it's you, I don't mean to offend you. I'm telling you that this is you would like a sign from above. This is the sign from above. If you don't do something right now and you wait for interest rates to drop, you will pay a much heavier price, because as prices go up, as interest rates come down, prices are going to go up sharply. And Barbara Cochran from Shark Tank, one of the biggest real estate agents in the country, thinks that we could see a 15% increase pretty quickly as soon as we start seeing rates in the mid to low fives again. So 15%. I mean, come on. If you think housing prices are high now, wait for rates to drop. They're going to go way up. So if you're thinking about buying, do it now. Do it now. There's down payment assistance programs. I've got USDA financing with no money down, FHA 3.5% down. I've got conventional 3% down, 5% down, local down payment assistance programs. We help a lot of our folks with credit repair right here in the office, so you don't have to pay a company to do it for you. So these are all things that we do to help our customers get a better mortgage. I mean, I've got a guy right now that's got a 734 credit score and he qualifies just fine for his mortgage. But he said, "Hey, Bruce, is it possible for me to get a better rate?" Yeah. If your score was over 760, your rate would be a little bit better. So he said, "Can you help me get it to 760? So I can't get it to 760. There's nothing we can do. There's nothing that could happen in that time frame, but I can get it to 750. And that got him a little better interest rate. How do you like that? So I mean, I want my folks to get a better interest rate. I want my folks to have the lowest possible closing costs. I want my folks to know how to negotiate when it comes to purchasing a home. My God, I help my clients negotiate real estate transactions all the time, because I don't think that most real estate agents properly know how to negotiate. They look at what it's posted at, they look at a comp, and they tell the client what they think. And then you see clients don't know how to negotiate because they're just lowballing everybody. So you have to have a strategy. Read the book, Never Split the Difference. My name's Bruce Woodburn. You can call me now at 407-706-3313 or 813-213-4009. Or go to WeBringYouHome.com. That's WeBringYouHome.com. And get your application taken care of right then. If you need a real estate agent, when we come back from the next break, I'm going to go over how you can get discounts on real estate services by going through the Loan Arranger, and we're going to help you find a great real estate agent for you. So don't go anywhere. The Loan Arranger will be back in 5 minutes.